Greetings, ladies and gentlemen. After a turbulent start to the year, it's time to dig into the world of banking and investing with a narrative that will have you on the edge of your seat. Are you ready? In the upcoming weeks and months, there is hope for Tesla stock as it has rallied from $108 to a more reasonable $177 per share. Although Wall Street is feeling upbeat, there's a catch. One valuation method indicates growing enthusiasm for experts on Tesla stock are wary of the effects of growing interest rates. So grab a seat and let's explore what the future holds for Tesla stock. Let me share my initial observations. I think things could be much better for you than you think if you're a little investor with only 2 shares of Tesla stock. Could early retirement be in your future? Let's see how much you can achieve. Let's go in, but first hit the like and subscribe buttons. What are the chances that those shares will be worth as much as everyone is predicting? Thanks to the market's recent strong reaction, Tesla investors are enjoying themselves greatly. Despite a small dip below 100 on the 4th trading day of the year, the price of Tesla stock has been steadily rising for the majority of January 2023. Ascending Tesla just released their Q4 results. Even if there were first reservations about the company's revenue, the financial results surpassed projections and sent stocks skyrocketing. With a 52-week low price of 101.81 cents and a 52-week high of 384.29. Tesla is currently 55 below its previous surge after positive earnings results, and better than projected, the price of the U.S. GDP test stock fell below 170 in the most recent trading day, and most other stocks closed lower as the Nasdaq fell by 2%. At the moment, the stock is supported at about $167 and is rising above the 50-day moving average, but the net price is below the 200-day moving average of 197, with 179 serving as the first level of resistance. In a recent interview, well-known investor Cathie Woods claimed that the pre-share price of $3,000 per share is the lowest end of her Tesla price range, and that financing Tesla's eventual triumph has increased. She specifically identified an increase in their market share as the main reason, saying that it had happened between the end of 2017 and the present, despite the approaching arrival of electric vehicles from Ford, GM, and Toyota. Despite this, Cathie Woods remains extremely positive about one of her favorite companies. Given that the stock is currently trading below expectations and would need to rise significantly to reach Woods' target, Tesla Woods' valuation of the company at $1 trillion may seem ludicrous. However, there is talk of a fully automated light vehicle network from Tesla, known as the Tesla Network, which will generate enormous profits for the business. In an email to Tesla employees, Musk brought up ARK's latest pricing projection and stated that he agreed with the research and that with sufficient work, he could be able to agree with ARK as well. When Tesla stock hit an all-time high in 2021, Musk tweeted to his followers that he thought the price was too high. Board members and Tesla investors sued Musk, claiming that the CEO's irregular tweeting violated an agreement reached with the SEC. Musk also predicted that if the price of Tesla stock reached $1,000 per share, the company's total value would reach $3 trillion, making Tesla the most valuable business in the world. Currently, Tesla Motors has a market value of over $730 billion, making it the most valuable automaker globally. Musk often comments on Tesla's stock value. With the $5.76 million sale of 8,100 shares of Tesla equity, despite the rise in stock price, ARK Investments reduced its stake in the company by less than 0.5%. However, as the price of Tesla shares fell in late 2022, Cathie Wood had been buying a lot of them recently. For example, Tesla accounts for 10.9% of the portfolio in the first flagship ARK Innovation ETF. Wood believes that the introduction of new electric vehicles from established automakers will validate Tesla's approach, and she sees plenty of opportunity for electric vehicles in China. After 2 days of losses, investment banker Piper Sandler released an upbeat note, which caused Tesla shares to rise 3.1% as of February. For the first time, Tesla made money. This suggests that new investors in the electric vehicle maker stand to gain as much as 55% on their initial investment by the year's end in terms of profitability and capitalization. Additionally, Piper predicts increased profits for Tesla in the future, which would boost the stock price, according to Morgan Stanley analyst Adam Jonas. Piper Sandler showed some love for Tesla by raising its price objective of a stock to $750 and reiterating its buy rating. Present condition of the electric car, according to Jonas, the market is like a race, and Tesla is leading. He used the marathon comparison, saying that Tesla is at mile 21, while everyone else is either at mile 2 or is still tying their shoes. Recent record sales of Tesla's vehicles suggest that the company's position will strengthen as the race goes on. Jonas increased his price estimate for the stock from 400 to approximately 430 based on his prediction that the automaker would sell more cars in 2023 than it did in 2022. Experts recognize Tesla's potential as a result of supplier changes in software rewrites because of the company's operational skills during the pandemic when other manufacturers were dealing with chip shortages and supply chain constraints. In order to keep up with the increasing demand, Tesla boosted production by establishing 2 new facilities in Austin, Texas, and Berlin, Germany. Tesla's current Fremont and Shanghai locations, these new facilities will complement those in California. With the addition of the new plants in Berlin and Austin, all of these changes will enable the corporation to boost earnings and production rates. Tesla will have more chances to raise its profit margins, allowing it to put those gains back into enhancing customer care. The UK and Norway are among the top markets for the company's cars, but it will take Tesla more than $40,000 before any discounts, rebates, or gas savings. According to Gordon Johnson, an analyst at Vertical Group, Tesla lost almost $14,000 for every Model 3 car that was sold in 2018. Although these numbers will increase with more success, there is still a chance that Tesla's batteries may run out. This was a problem that the company's management noticed early on. The company's battery problem should be remedied in Nevada at Tesla's theme facility, known as the Gigafactory, which is presently under construction. The lithium-ion manufacturing factory will help raise annual Tesla vehicle production to above 500,000 units. Its proposed footprint is over 1.9 million square feet. Currently, it is unknown if a Gigafactory will be finished on time because large-scale projects frequently encounter logistical or legal issues. The Gigafactory, which is expected to boost the economy by $100 billion over the next 10 years, has received approval by the state government of Nevada. Several major automakers, including Mercedes-Benz, Volkswagen, Subaru, and BMW, are planning to introduce electric vehicles to consumers within the next few years. As this happens, competition for Tesla's market share increases, and tech companies may join the war as well. The electric vehicle market has seen an increase in competition. To counter Tesla, Apple and Google have placed bets in the automotive sector. If you own Tesla stock now, you could be sitting on a sizable fortune in the future. Do you have a predictive value for Tesla stock? Feel free to share your thoughts in the space below. If you find this video helpful, be sure to hit the like and subscribe buttons. I'll see you in the next video. Tesla is concerned about competitors who have an established client base even though they still have a ways to go. It's encouraging to see Tesla so far ahead of the competition. Music.